All right. Okay, I can see some of you guys rolling in. First of all, if you guys are just joining us right now, welcome. We are starting the session in about 3 minutes at 11:30. But before we start, I just want to give you guys an introduction to a little bit to the event and also what you can expect for the remainder of the day. My name is Jeremiah, and I'll be your MC for today as well. So, welcome to the Market Insights Virtual Summit. This is for Q2 2021. This event obviously is proudly organized by MarketWise Asia. We also have Alex from MarketWise. Alex, you want to just say hi real quick?
Hello, good morning, everyone. I think today is a Sunday. Can be quite a sleepy day, right? But thank you for tuning in and listening to all these awesome speakers that's going to present their trading strategies and knowledge to you guys. All right, so the chat is a bit quiet. So if you guys can hear Jeremiah and me, right, just say a hi in the comments, in the chat box, sorry. All right, the chats are coming in. Good to see every one of you here. All right.
Yep. Good to see everyone. Good to see everyone. And I think without further ado, I know you guys are interested to hear from Terence speak already, but I'll just run through just a brief some house announcement and some upcoming events that I want to share about. Okay, so just let me go ahead and share my screen. All right. So first of all, obviously this is the Market Insights Virtual Summit. We were live yesterday, 27th of March, and today on the 28th of March we are also live, and this is our second session for the day. We have a lot more sessions upcoming, so do keep around for that, because I can promise you there are a lot of insights that you can extract from each of the sessions. I would like to thank our media partners, BK Forex, Swim Trading, The Systematic Trader, as well as Terra Seats for making this event possible. And next up, if you don't already know, I would highly encourage you to join and just stay in the loop of all the information that we share via our Facebook channels and our Telegram channels. You can join them by clicking on the link that you can find in the chat box. That should be shared with you just about in a minute. I think it's there already. And just click on it and join it, just because there's a lot of information that we share on these platforms. We do things like our occasional live streaming. We actually share exclusive discounts. We share about our upcoming events. So there's a lot of content that we are pushing out on these channels, and it's just great for you guys to be able to be part of this community, okay? So now, for this particular event itself, we are very, very excited to have IG as one of our sponsors. In fact, Terence, who will be speaking later, is the head of business development and education from IG Asia. But I'm very happy to share an exclusive promotion from one of our exclusive partners, and that is a promotion where you can receive $100 of credit when you open an account with IG. And this is obviously an opening of a new account. And all you need to do to be eligible for this promotion is that you have to have a Singapore residential address. So any foreigners that are that have an address here in Singapore, you'll be eligible. And it's very easy, very simple. All you need to do is just fund at least $500 with one trade in the last 30 days. Terence, I noticed that you are unmuting yourself. You want to mention something, is it?
Oh, no. Just letting you carry on.
Oh, okay. No worries. I thought you wanted to shout out for this promotion, exclusive promotion. But yeah, so I would highly encourage for anyone out there that doesn't have a platform yet to join. I use IG, and then you get the $100 credit. And on top of that, you also get a physical copy of the Trader's Blueprint, which is a very, very good book if you're looking to start your trading journey. Okay. Now, last things that I want to mention is our upcoming events. So it's happening in July, on the July 10th and 11th. We are having our next Market Insights event, and this is where we're inviting Tom Basso, who is from Trendstat Capital Management, and also Michael Covell, who is the founder of trendfollowing.com. Now, these two are very, very experienced individuals with their own trading philosophies, and they will be sharing about the trend following mindset. So keep keep in the loop on that. And how you can do that is actually you can sign up for the event right now. I think Alex will help me to send an invite link for you guys to click on, and that's going to allow you to register for this upcoming event. I will highly encourage that you do so because this is one of the most anticipated events for the next quarter. Okay. All right. So with that, I think you've heard enough of me talk already. You've probably been hearing a lot of Alex and myself speak over the last two days. So it's time to pass the time over to our next speaker. And our next speaker, you can already see his video. He's none other than Terence. He's actually a qualified chartered market technician since back in 2014, and is also a member of Mensa Singapore. Currently, he's now the head of BD and education for IG Asia, and has over 15 years of experience in the financial industry, going back to 2006. He frequently conducts seminars in topics like technical analysis, forex trading, risk management, trading psychology, and automated trading systems. So a lot of experience, a lot of insights from Terence that he can actually share with you guys. Today, he'll be talking about how to take advantage of the market safely with a risk mindset. Okay, so sounds like you can't do that, but Terence is going to give us tips on how to do that. So with that, Terence, I would like to invite you to join me. Terence, can you hear me?
Yep. Thanks, Jeremiah.
Okay, perfect. I think we're all ready to hear from you already, so I will not take any more of your time. I'll pass the time over to you, and you can crack on.
Right. Thanks, Jeremiah again. All right. Just want to see who is from Singapore. Could you just type in hi, I'm here, the kind, or just type in some fun comments. All right, quite a good number there. Thanks for joining us on this Sunday morning. I know that Sunday mornings is very precious, and there's always a lot of like bringing your kids around to many different enrichment classes and stuff. Can I also ask who is from the ASEAN countries like Malaysia, Indonesia, Philippines, Vietnam, or even like Taiwan, just a bit out like Asia? Anyone? We have Australia, KL, Philippines, Malaysia, Indonesia. All right, so we have quite a number of Malaysian attendees. Or we have Myanmar, Nepal. All right, it is good. Anyone from Taiwan? Penang. Anyone from Taiwan? Japan? All right. Okay, who is from the Europe side? Europe and US. I saw a Canada somewhere. All right, Europe and the US on the other side of Earth. If you are joining us from there, welcome again. Just so you know that I really appreciate your joining us. You are actually very, very late in the night right now. All right. If you are from US as well as Europe, you might have seen me in some other events that was actually organized by either the US side or the London side. All right. Thanks for joining us again. Now, let me just reiterate the promotion just now, right? So for this event, right, we're actually giving away $100 trading credits. So you can actually encash that as long as you actually open the account, fund $500 in, and make at least one trade in the next 30 days, starting from now. All right. So I really want you to actually get your account open, just because that there's actually a lot of opportunities that is coming. Later I'll actually explain a bit on that. And you want to get yourself prepared up. All right. So when the market starts to move again, we know for a fact that it's actually harder to open an account then. All right. So while it's actually easier to open an account right now, just get it open and you can actually get even $100. And you can also get a free book if you are within the first 10 of those who qualify. All right. So let me just get started with this, with my section today. All right. And let me just share my screen right now. All right, so can everyone see my screen here? Okay, let me just try to toggle around the chat box.
Yes, we can see your screen.
Okay. All right, I think I'm already seeing the first questions coming. Will there be a correction in May? All right, so today I'm not really going to give you the answer exactly for that, but the various things that you have actually learned yesterday as well as today, right, from various speakers, that actually already answers that question itself. Now, I especially like what Rainer Teo said about price action trading, and I'll actually re-emphasize that again. This is really what the market is happening right now. You can actually take advantage of how the market is actually moving. let the price guide you. All right. So what I'm going to share with you guys today is really to take advantage of the markets as it's moving. And I'm not going to be going one single direction, because if you're actually just into stocks and shares, you only have the mindset to go long, right? But what if there's actually opportunities coming to go short? All right, you might totally miss out on that. So the main thing is that if you have an open mindset, I would rather that you actually take a look at both sides. If you are still keen on just only taking advantage of the long side, then just be very wary of various risks that might be happening. And hence today's session here. Now, you also see that I'm actually putting this as a foundational series. So this is actually, what I've actually done here is that I've taken the whole 21 webinars. This is actually a 21 webinar series that I've actually been conducting for the past many months. And it's still ongoing, all right? So we are now in the intermediate series of things. If you want to actually hear more about the webinars from me, this is actually free. You can just sign up for an account with IG, go over to the seminars section, all right? So you will actually see the various details there. So this is actually what I consider as the foundational series. And why is it foundational is that if you don't get this right, you can't make money from the markets, all right? This is how important it is, all right? So let me just flash the disclaimer first. Now, for those who are actually new to trading, you need to be very aware that the market can time and again dislocate. When I mean dislocations, right, you actually see like individual stocks and shares, you might have a big gap, all right? So even if you look at certain stocks like these days, like you can see like Tesla, there was actually a big move for the past few weeks. You can actually see that that's only just one particular stock itself. What if the whole market dislocates as a whole? All right. So the thing is that sometimes the dislocation can happen slowly. Slow meaning to say it can happen within a few days. A few days is slow. All right. But sometimes the market can dislocate in the matters of minutes and hours. All right. When that happens, it can be very drastic. It can be very crazy. And we have actually seen that when the Swiss currency actually repegged, the whole market just collapsed within less than half an hour. All right. So it's very, very crazy. And the thing is that if, let's say, if anything that's actually of a systemic risk that happened in the whole market, then you can see these kind of things happening again. So later I'll actually explain on that. So please refer to the risk disclosure statements in the risk fact sheet at ig.com.sg. All right, so that's very important. I also want to point out that whatever that I'm actually commenting on the markets, these are not recommendations. So if you actually listen to that and you actually take action because of that and you lose money, you can't blame me. All right. So just to make it very, very clear on that. But I want to still talk about the markets just because I want to actually provoke your thoughts and give you a reference from where you can actually do your own studies on. All right. Okay, so for those who are actually hearing IG for the first time, actually we have been around for super long. All right, so we have around about 45, 46 years, headquartered from London. Even in Singapore, we are already in our 16 years. All right, 16 years right now. So if you have not yet opened an IG account, please go and do so right now, just because of the promotion, as well as you want to really stand by to take advantage of any of the opportunities. So we actually support all asset classes, like for example, like commodities, forex, cryptocurrencies, equities, stocks and shares, indices, and various other things like ETFs and stuff like that, interest rates and futures and stuff. All right, so take a look at this. You're actually quite missing out if you're not having an IG account yet. Now, just a very brief introduction of myself. I actually graduated from Com Science. All right, so that was in 2004. So I'm more like a geeky guy. You can actually see that from my hairline here. So when I actually graduated, I actually did some online business just to try to make a quick buck here and there. So in these days, you call it a side hustle. So my side hustle was actually quite successful. But at the point in time, my friend was asking me, hey, go and get a proper job. All right. So I actually went to become an air traffic controller for one day. So I was one of those guys controlling their planes at Changi Tower up there. All right. So it was actually quite fun. I learned the technique of actually multitasking, like 2 years, right? One listening to the pilots, one listening to your co-workers, all right, while you're actually talking to different people here and there. So that's air traffic control, very challenging job. But the thing is that as I was actually doing that, I was also doing a lot of investments, like what a lot of you guys actually started out with. It all started with like a side hustle kind of a thing, right? But as I ask myself, if I want to really get good at this thing about investments and trading, right? Should I actually stay as an air traffic controller? So the answer is no. All right. So I actually jump over to the banks and the brokers. With UOB first as the lowest life form, they call it the personal bankers. And then after that, Standard Chartered as a relationship manager. After that, I went to join Saxo Capital Markets. So I was dealing in all different asset classes here and there. Whatever you can think of, we have kind of seen the various scenarios. All right. So in 1.5, I actually left Saxo to actually do my own thing on financial training, as well as writing my own algorithms. So I'm still constructing my own algos. I have more than about 50 plus algorithms right now, still growing. The main thing is this: as I'm actually creating the different strategies here and there, right, what I realize is that the simple things do actually work much better than the more complex strategies. All right, now, along the way, I've gotten myself certified as a chartered market technician. So that was back in 2014, correct. So back then, right, the amount of books that I actually had to study in order to pass the 3 levels, right, so it was for 3 years, I think it reached the height of my chest, all right? So the curriculum was so crazy that a few years after I gotten my certification, they decided to reduce the curriculum, all right, because everyone was complaining it was too much. Now, I learned a lot about very, very complex indicators, strategies, and what you have used. Now, if you look at the markets itself, right, what is really effective are the simple things. Why is that so? It's because technical analysis, right, as a whole, it is useful because it is self-fulfilling. If you're using it and I'm using it and he's using it and a million other traders are actually using it, then it becomes true. All right. So if you actually plot in your Fibonacci level, if you plot in your RSIs, if you plot in your moving averages, and then something breaks, all right, then therefore everyone will actually action in pretty much around about the same direction. So I remember what Rainer Teo actually said, that he was actually showing this picture of the sea, right? And then all the ships are actually moving in the same directions. I was like, this is so true. All right. These guys know what he's talking about. All right. So I'm actually going to re-emphasize that again today, as well as we actually also focus a lot into the risk management side of things. Right. So the first question is I want to ask you is that why do you even trade? All right. When I ask myself, when I ask my friends this question, they just stare at me like, hey, Terence, why are you asking the obvious? I'm trading because I want to make money. All right. Now I want you to actually think one step forward and think, what do you want to do with this money? All right. Are you trying to get this money because you just want to make yourself rich? Or are you trying to share this wealth with your family? Like maybe get a better house, maybe get some stuff for your family so you can share this and bring more happiness for your loved ones. Or maybe are you trying to achieve a certain goal? Are you trying to achieve financial independence? Are you trying to quit from your day job? All right. So I want you guys to really ask yourself, what is that motivating factor that gets you going? All right. You need to answer this first. All right. If you are going in with the mindset that, okay, I just want to make money, even a little bit is good. All right. Then end up, you'll just make a little bit and you just lose it because you don't have like a set goal that you want to achieve. All right. So the same thing is like, for example, if you want to travel out to go shopping, right? If you tell yourself, okay, I'll just go shopping, but I don't know where to go, you end up just roaming around and then you feel that the whole day is not satisfied. But if you're telling yourself, okay, I want to go shopping at Orchard area and I'm trying to look for a cheap deal with some golf equipment. All right. So you're telling yourself that that's actually going to be like a goal. Of course, along the way, you might shop for some PlayStation stuff, some Switch stuff, but you end up maybe buying the golf equipment that's on discount at 50% discount. All right. And then you are satisfied because you actually have got a goal. You might sidetrack a little bit here and there, but that's fine. All right. So ask yourself that question. Now, I want to actually show you what I'm going to talk about today. The first thing is actually writing out your own trading plan, but I'm just going to go on the broader picture of things. All right. It's more towards summarizing what the various speakers have already told you, but I want you guys to really concretize this. This is extremely important. Now, after you have your trading plan, right, you need to know where the risks are. So a lot of my friends, a lot of traders, when they actually started out with trading, right, they've been thinking about, okay, so how much money can I actually make? And they just stop there, all right? And then time and again, they keep making a lot of losses here and there. and they are at a loss of how to handle the losses, how to keep the losses low and everything. And then whatever money that they have made, it just lost out. All right. It's the same way as like, for example, there is this saying, if anyone wins a lottery without a plan on how to use the proceeds that they won from the lottery, they will very easily lose their money away. All right. So this saying is exactly the true for trading. So you need to manage your losses. All right. That's extremely important. And what are the various things that you can look at in risk management? When I started out looking at risk management, right, that was actually back in 08 and 09. I tried to look around for risk management things, right? All I can find is how to place stop losses. I'm like, that's so irritating. Now, 1 decade down the road, where I am right now, stop losses is just one small bit of risk management, all right? Risk management also encompasses managing your cash, actually sizing your positions, and a lot of different things here and there. So I will actually pen out the various things that you should look out for, but I'll just point out the key few things that you should focus right now, all right? And then I'll actually spend a bit more time on talking about sizing of position, all right? So I think but if I were to refer back to Rainer, what Rainer actually talked about, he did mention this also. He was talking about like putting in half of your trade in and then leaving the other half to be put in at a later point in time, as well as when he's ready to take profits, he take profit half first and then let the other half run. All right. So the thing is this: how can we actually even develop further on this? All right. Now, first off, writing out your own trading plan. Now, a trading plan actually encompasses of three very big things. All right. First is your entry rules, and then second is your exit rules, and third is okay. I'll just flash everything out here first. So first is entry rules, second is your stop loss, third is your exits. All right. So these three things needs to be there. All right. Now let me just emphasize on the entry rules first. So entry rules is something that a lot of you guys are familiar with. What are the conditions before you actually buy or sell? So if you are actually looking at the long only approach, then you'll be thinking to yourself, so at what kind of conditions would it need to be met before you go in to buy a particular stock or a particular commodities or whatever that you are trading in? All right. So that's the entry conditions. Now, the thing is this: a lot of different causes or a lot of strategies or whatever, right? Especially some of the causes where I'm actually seeing that they're not coming from a real trader. They'll just tell you like, okay, so you need to just take this particular trading strategy and you apply it, and this is the holy grail, you'll make money. All right. All the strategy has is when to buy. All right. Then when you ask them, then when do I take profits? Then say, oh, it's up to you. Now, when someone tell me like, if the take profit strategy is up to you, right? Then my eyes will really roll and like, okay, so how would you actually ask someone who is actually new to trading to have a gut feel on when to take profits? All right. So this poor chap here will just struggle with that, and then he will actually attend those other seminars on how to read candlestick patterns, and another seminar on how to read Fibonacci support resistance levels, and then maybe another class on some other stuff here and there. All right. So the thing is that so there is actually a lot of science to it. So entry is just one small part of this. All right. Now, stop loss rules. Stop loss rules, right? A lot of the talk on this is all about just placing where your initial stop loss is. So this is actually important. If let's say if you were to get in, where do you place your initial stop loss? But I want to expand this, right, in the sense that after you place this initial stop loss, for example, you're actually buying, right? So you place the initial stop loss. If the market is going in your favor upwards, where is your next stop loss going to be at? All right, you need to update your stop loss. You need to update your stop loss again and again. You can use trailing stop loss. I think that is automatically updated for you. Or you could have some other ways to determine where your next stop loss should be. All right, which is what we are talking about on the exit rules. All right, so exit rules, right, is when you're ready to exit, where do you think is a good level to take profit? Now, The thing is that time and again, I'm also seeing that if you read some research reports, they have this what they call as a price target. So they will say that, okay, so if you buy this, the price target is here. Now, if the particular stock or the particular instrument that you're trading in, right, if we can reach, let's say from $10 and then the price target is $14, so 10 to 14, right? So if you take profits at the $14 mark, what if we climb to $100? All right. So then in that case, you'll be telling yourself, oh, okay, so I make $4, but I missed out on the about $86, right? No, sorry, the $86, yes. So the thing is this, your exit rules, right, are supposed to be there so that you don't have a price target. All right. So when it starts to run in your favor, your entry is already correct. Your stop loss is to prevent you from taking too much losses if you're wrong. But since that you are correct, you should write this as much as possible until when the conditions are not favorable anymore. That's when you exit. So the thing is, this is your exit conditions. What do you define as when the conditions are not favorable anymore? All right. So instead of having a price target, think of this. This should be your exit rules. Now, if let's say if you are still trying to grapple with this exit rule thing, right? In the interim, what you can do is that if you really want to set a take profit target, you can set it at the level that is what we call too good to be true. All right. So if let's say if you buy at $10 and then you pull out this particular historical chart for the past few years, then you look at it, it's like, oh, $10. I think if you go to 14 is not bad, but not bad is not too good to be true, right? If it goes to 20 something dollars, it looks like, okay, it's quite sizable. But if you look back in the past, it actually came down from a level of $80. Now, if that's the case, then your too good to be true level should be $80 minus a little bit of a buffer. So it'll be around about $76 or thereabout. All right, so you buy at 10, you try to get out at 76. Now, the thing is that this is your take profit limit that is too good to be true. Most likely, it's not going to hit there. Most likely, you'll be exiting out when a certain condition is met. So the thing is this, just imagine, so you got it at $10 here. It goes up, it goes up, it goes up. As it's going up, then it starts to slow down. And then it starts to turn a little bit. Now, as it's turning too much, so you have to define what is too much. Are you using like parabolic star? Or are you using a moving average crossover? This part, right, when it's turning too much, take profit. All right. So this turning point here, right, could be $40, could be 50 something dollars, or could be 20 something dollars. You don't know this price level beforehand. Of course, as it's getting there, if it hasn't even turned, but it hit your too good to be true level, which is $76, then so be it, because this is an extremely good level that you have set in and you didn't expect it to be hit. All right. So think of this as an exit rules here. Now, I'm just presenting this as a very generic framework. All right. But the thing is, think about this always. So when you're actually creating a trading plan, right, don't only have your entry and your stop loss and a take profit target. That's not good enough. You need to have an exit strategy. All right. So if you are still grappling with this, right, I want you to actually go back to Rainer Teo's recording. He talks about this exit strategy in his presentation there. All right. That's actually one form of exit strategy. So the thing is that once you understand that, can you develop your own? All right. So in my various different trading strategies, in my algorithmic trading, right, so every one of them has got an exit rule for it. All right. So that's for trading plan. Once you've created this trading plan, right, don't change it. All right. If you want to change it to modify to make it better, right, then that's your strategy 1A. All right. But you still keep your strategy 1. All right. So the thing is that once you have formulated your strategy 1, your trading plan 1, right, that's the first one that you've set in. If you want to modify to make it better, create like a version 1A or 1B for that while keeping 1. All right. Then you see whether the 1A, does it really perform better than 1 in the real market? If it doesn't, throw it away. All right. The thing is, I want you guys to actually really get yourself familiar with this thing called discipline. All right. Once you have created it in, put it in, and then don't change it anymore. All right. So, and then you respect this. Now, the thing about respecting a trading plan, right, is it can be quite hard just because time and again we always get swayed by news. So like if let's say if you're actually buying something and then the news is actually coming up with some potentially doomsday kind of news here and there, right? News tends to sensationalize things, right? You need to understand that. And one of the things that I realized that it really helped my own trading is that when I stopped reading the news, all right? If you actually subscribe to any news channel that you're actually hearing every morning, I want you guys to actually stop subscribing to those news and regain some time for yourself that you're actually spending on those news and see how your trading actually improves. All right. I'm very sure that I'm not the first trader that's actually talking about this, but switch off news and let the market guide you, not the news. All right. So the thing is, when you trust your trading plan, right, you need to see results. You need to actually see the profits coming in. And then when you see that your account is actually growing in a very steady manner, right, then when you start to ask yourself, okay, so what I'm doing, it seems to be right. I'm following a certain trader's methodology. I'm trying it out. It seems to be working, but I'm very puzzled. Why is it working? All right. So you're seeing results, but you're not sure why it's working. And you have this innate subconscious fighting with your conscious there, right? So your subconscious is thinking, okay, I think I'm onto something right, but your conscious is telling you, read the news. The news is telling you something different. So there's always a conflict there. Or if you read some analyst report, then you see that there's actually a conflict there. Why your trading plan is working when it's working is because it's this thing what we call price action. All right. So when you actually have a trading plan and your entry strategies and your exit strategies, right, it actually sees the movement of the price itself, and that can actually affect the various indicators here and there. Right? But it sees the movement of the price itself, which takes into account the net psychology of the whole markets already. All right. Some of them are bearish, some of them are bullish. All right. So if you take into account the whole psychology, it's shown in the price itself, plus insider trading. All right. So people who have got access to privileged information, they'll go into the markets to actually make some trades first before they actually get this new piece of news announced to the whole market. All right. The thing is this, insider trading, is it illegal? Yes, it is illegal. But why is it still happening? Because it is just still happening. So the thing is that they could happen in some very various different modes here and there. But rest assured that you can actually see that the price in the markets already starts to move. All right. So once you actually analyze the price itself, right, you now have the ability to see what the insiders are doing before the news reports them. All right, so that is actually very, 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 very important there. Now, the markets tends to price in expected news and events way before it happens. So there is this thing, if let's say if you're going long on something, right, there is this saying, buy the rumor, sell the news. All right. So if let's say if you are looking at the pandemic itself, so now we're actually seeing that the vaccine is getting deployed. All right. So that's a good news, right? When do you see this market reacting to this good news? Before the vaccine is deployed. All right. Before the vaccine is deployed, the market is running up, right? As the vaccine is deployed, that's the news. That's the good news. As the vaccine is deployed, the market starts to turn downwards. All right. So you need to understand that if let's say if I tell you now, this particular stock will go up 100% on the 1st of April. Right? Then you'll be like, this stock will go up 100% on the 1st of April. Would you wait until the 1st of April to actually buy it? No, right? You'll buy when? Somewhere in February, somewhere in January. Because let's say for example, you know for a fact that it will go up on the 1st of April. You have like a time machine, right? So you buy it beforehand, all right? When would you sell it? You sell it just before the 1st of April, because you know that everyone is trying to rush through the door, right? But if everyone is selling it just before the 1st of April, you sell it about mid-March. right? That's the rationale behind the buy the rumor, sell the news, right? Once you understand this, right, you understand that, oh, so that's how the market works, all right? And this, you can actually see it in the price itself, and it takes into account the whole net psychology of the whole market, all right? So how do you take advantage of this? Stop reading the news, follow your entry, stop loss, and exit rules. That's your trading plan itself, all right? So when you actually do that, right, first thing you will find is that the positions are actually usually open before the rumor starts. All right. So remember we were talking about buy the rumor, sell the news, right? But even before the rumor starts, you will start to see that something is moving already, and then you'll be very bewildered, like, okay, that thing is moving up, and that thing is moving up very fast. What is happening? All right. Don't answer the what is happening. Just go and buy first. All right. But when you're buying in, buy a little bit first. All right. So for me, I always advocate that when you're suspecting that something is happening, when you're going into the entry phase, right? So when it starts to hit your entry rules, get in with a quarter position first. All right. So that's the sizing of positions that I will talk about. 1 quarter in first. If it's going in your direction, 2nd quarter in. If it's still going in the in the direction that you want, 3rd quarter will go in. If it's still continue to go up, 4th quarter in. All right. So by the time you have your 4th quarter in, right, most likely the news will start to report certain facts already, by which all your full position is already in, but your friends are starting to tell you, hey, Terence, have you seen this piece of news? Do you think it's a good time to get in? Then you're like, oh, I'm already in already. I'm actually trying to see when I'm getting out. All right. So that's the reason why a lot of the new traders are buying when the expert traders are looking to sell. All right. Because the expert traders have got this entry, stop loss, and exit rules, and they'll get in way before you. All right. So the thing is, on this fact that your existing open trades, right, will usually hit your stop loss or your exit conditions before the news is announced. All right. So this is your buy the rumor, sell the news. Now, when you finally pull the trigger, right? So just like I actually mentioned in a bit about that, the 1 quarter, 1 quarter, 1 quarter, 1 quarter. So as you're getting in, pyramid in. All right. So that's your 1 quarter in and in and in and in and in. And when it's hitting your exit rules, when your exit rules are finally met, so you're actually seeing something that's going up, and then when it's starting to turn and it's starting to meet your exit rules, right? Pyramid out. So the thing is this, you're not sure whether is it really turning or not, right? So you get out with a quarter first, and then you get out with the next quarter. If it still continue to go downwards, then you get out with the next quarter. The thing is, if you get out the first quarter and it then starts to turn upwards, right? Then in that case, you can hold on to your remaining 3 quarters. All right. I think Rainer Teo talk about getting half out first. All right. Same concept. All right. So whether it's half out, 1 quarter out, or you want to use 1/3 is up to you. All right. Pyramid in, pyramid out. Okay. So the thing is, once you actually started to embark on this journey of trading, right, you need to understand where the risks are. Okay, so let me just show you what the traders usually think. So a typical new trader who's actually new to trading or new to investments, he usually thinks about how much he can make from this particular investment or trade. Because why? It's very sexy, it's very motivating, and he can just imagine, okay, I want to get that Lamborghini. All right, if let's say if this goes up to the rocket, to the moon, I can actually get this new house, this big bungalow. You just think about all the various good things. All right. But however, a successful, experienced trader would actually have a slightly different mindset. All right. He also attempts to spot and envision all possible ways that the trades can result in losses. All right. So the thing is this, if you actually look at the various different things that can actually result in losses, right, you'll be thinking to yourself, okay, so I need to take care of this, I need to take care of that. Am I safeguarded already? All right. So once you got your downside, your profits will start to roll in more consistently. All right. So that's the main part about why we always talk about risk management side of things. And you don't really hear this from the new traders, because the new traders, they're always thinking of how much they can actually make, right? But when they're actually thinking of that, the losses will always hit them, always, all right, without fail. But the thing is, once you see where the losses can hit you, then you gut them, then that's when you can let the profits roll in, all right? So the very first risk you need to think about is the non-systemic risk. So these are actually the risks that are very simple. It's just inherent to the individual stocks or the individual commodities, forex, or whatever that you are trading in, right? It's very easy to actually get this risk out. You just need to diversify out by adding more instruments from different instruments or different categories. Now, there is this myth that goes around that says that, oh, but if I diversify, then I cannot, then I'll actually be reducing my potential profits. That's not true at all, because if, let's say, for example, now, if this particular instrument, you're actually gunning for a high rate of return, let's say you're going for 50% to 80%, all right, over the next 1 year. Let's say if you want to keep it at this rate of return here, right? So you can look for other potential opportunities that have got the same potential rate of return, all right? So you put everything that has got the same potential rate of return together, the rate of return actually stays the same, all right? But your risk is 1 over the whole amount, the number of instruments that you are putting in, all right? So literally your risk actually reduced much less, but your whole rate of return still remains the same. Okay, so that's the concept of diversification. Time and again, people are just looking at, okay, so if I were to diversify too much, then in that case, my rate of return actually reduces. So that's what we call a blind diversification. All right, so you're just like, okay, let me just thumb everything from the index, and then I'll just put everything in. But what you're actually doing is that you're actually taking the high potential ones and the low potential ones, and then you put them together. All right, so that's not then that's not say something that you cannot do. It's just that that's the way to reduce your potential profits, all right? So that's non-systematic risk. Next, systematic risk is actually when you're actually looking at the whole market itself. So right now, you can see that there's actually a lot of different analysts that's talking about this systemic risk, that the whole market has got this potential to come downwards. There might be a liquidity crunch, and you can see that there's actually many reasons why this could potentially happen. All right, I'm not going to go through those reasons right now. If you look at the prices itself for various index, you can actually see that there is a possibility of that happening already. Started a few weeks ago. All right, so the thing is that, how do you actually get yourself out from this kind of risk? Your exit strategies is supposed to get you out. All right, remember that your exit strategies, if let's say if the markets were to turn, then if you have an exit strategies, then certain conditions will be fulfilled, and then you'll be getting out. All right, so this systemic risk, you need to depend on your trading plan. Of course, if you are asking yourself and you're looking at your portfolio right now, right, if you're taking your handphone and taking a look at your current portfolio, you're like, oh, I got a list of stocks here. They have lost a bit of money in the past few weeks, but I don't know when to get out. The answer is that because you don't have an exit strategy. That's why you don't have a plan to get them out. All right. So systemic risk, you really need to get things out when things are going against you. All right. You could have the scenario whereby you might be sitting in cash because you're getting everything out. All right. And that's actually a good thing. Now, so systemic risk is actually still something that you can mitigate. So I want you guys to actually mitigate this risk out. The last one is a bit harder to mitigate. It's what we call the black swan event. So for those who are actually new to this, right, I urge you guys to actually go and buy this book. I think it's only about $20+. All right, so you can just get this from Amazon or Kinokuniya or anywhere. The Black Swan by Nassim Nicholas Taleb. All right. So what it means is this. It's an extremely rare event that could go either very positive or very negative. So the thing is, if you're long and it goes very negative, it's going to be hitting you. If you're short and it goes very positive, that's also very bad for you. All right. So black swan event is what we call thinking of what is the worst case that can happen. All right. So the examples on this, right, would be things where a lot of traders would be discussing, what is the risk of Dow Jones going down by 50% in the span of 1 week? All right, that's a black swan event. Then what is the chance of Tesla going down 40 to 50% in a short period of time? That's a black swan event. Oh, that actually has already happened. All right, so you see that black swan events are this kind of event that is a very fast market movement that could happen that dislocates things. All right, if it happens in a few days or weeks, right, that's considered as slow already. If you look at the Swiss franc, it can happen in the matters of minutes and hours. And when that happens, what is your protection? All right, there is this concept, right, that if you're actually getting into mutual funds or unit trusts and or even ETFs, right, when you want to sell, so let's say, for example, mutual funds or unit trusts, when you want to sell, you actually have to go and inform your provider to say that, okay, I want to actually sell this. And then when will the sale take place? It's either the next working day, or if it's over the weekend, then you have to wait until Monday or Tuesday before that selling can actually go through. But the black swan event can actually happen over the weekend or anything like that, right? So the thing is, from the price that you actually see on when you want to really sell it to the price where you really sold it, the execution price, the difference there, right, is what we call a slippage. All right. So during black swan events, the slippage is very crazy. All right. It can be many percentage below your intentional price that you want to actually get out with. All right. For those who are actually trading, you'll be familiar with this concept of stop losses. Now, when you put a stop loss in, right, if the broker is just using a normal stop loss, so what happens is that when it hits there, but if the execution price is way below, all right, you will still be executed and filled at the price that has got that big slippage there. All right, that's a normal stop loss. So a lot of people have got that concept that stop losses is to totally protect you, but it only protects you in the normal market. All right, if you're talking about black swan events, it doesn't protect you against that. Only guaranteed stops prevent you from getting hit by such things, which I'll actually talk about very shortly. So these are the three big events that could actually kill your whole portfolio itself. Now, I just want to show you how bad things can actually happen for black swan events. So this is the Swiss repeg back in January 2015. So the exchange rate was actually just moving like this. This is Euro versus Swiss. All right, so you were just trading sideways. Suddenly, the Swiss central bank actually came with an announcement that they will repeg it or unpeg it. And it just totally went downwards, just like that. All right. So if you look at the numbers here, right, this is 1.2. This is less than 1. All right. Just imagine you are leveraged 50 times on this. It's very crazy. I remember this when I was actually still at Saxo Capital Markets. This happened after 5. I think it was closer to about 5:30 p.m. I was just getting ready to knock off. All right. Then I was actually looking at the big screen there. And then I see the prices starts to flicker. And then it was flicking very fast. All right. The net result of this, right, is that there is actually a lot of different accounts whereby they actually lost a ton of money just because of that. There was some others that was actually using some trading strategies, right? They managed to sell. When they actually going in to sell at market, they didn't get this price, of course. They managed to get at a much lower price, but they managed to ride the wave down and took profits quite close to the low there. So a lot of people lost a lot of money. Some made a lot of money then. All right. So these are black swan events. So you can actually take a look at this. You can just Google on this. You can actually find this out on everywhere on internet. Now, something that's more recent is the negative oil prices. So I think some of you guys might actually have already seen this. This was actually last year. All right. Let me just flip back up. So this is $0 here. So this is 0, and then the price actually went down to about close to negative 40. Well, I think negative 32 or 38, right? So the thing is that if you're actually looking at oil itself, right, people are actually paying you to buy the oil. Why is that so? It's because once you get the oil, you need to actually also store it, and that costs money, right? And people don't want to actually take delivery for that. So there's actually this particular contract there. Now just imagine if you are doing some arbitrage strategies here and there, right? You get hit so bad that it's not funny anymore. All right. So if you have actually used a guaranteed stop, then that actually prevents you from taking these kind of losses. All right. So I'll actually talk about that very, very shortly. So the various risk management tools that you can actually use, first is actually stops. All right. Of course, a standard stop that a lot of different trading experts will actually tell you, put in your stop loss. All right. So it actually helps to protect you against the adverse markets. You can also use trailing stop loss because it actually moves with your profits. So you're actually also locking in your profits without needing to go in and lock in to adjust your stops. So stop loss and trailing stops, at least have them. But as you're looking at if the market has got this potential to dislocate, all right, so it could be sometime in middle part of this year, there's this saying that says sell in May and go away, all right? This is just my own personal view. So I'm not saying that the markets will definitely crash then. I'm just wary that this is a risk that I need to take care of if I'm still going long on anything right now, all right? Because sell in May and go away. And I can already see some evidence on certain big indices like NASDAQ and stuff like that. It's already starting to trend downwards. All right. So if I'm still going long, I'd rather have a guaranteed stop there, which actually has got an absolute limit on my potential loss. So just imagine this. So you buy something at $10. If it goes up, now it's at $16. You place your stop loss at 14. Right. So you move it to 14. But if it's a non-guaranteed stop, if let's say if it's at $14, and then suddenly because of this downwards movement of the whole market itself, and then they uncover fraud because this particular CEO actually embezzled money. All right, so from $14, the next day it opens with a price of $4. So from 14, it dropped to $4. You place your, sorry, from 16 to 4. You place your stop loss at $14. Will it execute at $14 and get you out at 14? No. All right, it'll get you out at $4, which is way below. All right, but if you actually have put in a guaranteed stop, then yes, you will get out at $14. Then IG will actually take your remaining losses there. All right, because we have certain other mechanism to actually insure against that. All right, so guaranteed stops. We found that as the market goes very volatile, we have more than half of our clients using guaranteed stops. During normal market, we only have about 1 quarter. All right, so it fluctuates between 1 quarter to about half. All right, so take a note at this. This could be one of the main reasons why you actually want to have an IG account. All right, so a lot of our new account traders, right? What happened is that they only came to open an account with us when the market starts to dislocate. All right, so why not actually just stand by right now first? All right, so that's guaranteed stops. Okay, I'll just show you how it looks like on the platform itself, right? So, okay, this is actually an old screenshot here, but there's this thing what we call a guaranteed stop here. So when you place this in, this is the maximum, this is the lowest price that you can actually get out with, even if it dislocates below this price. All right. The only thing about guaranteed stop is that if it finally hits your guaranteed stops, then there's also another additional premium that you are paying, which is just, in this case, like just about 30 cents only. All right. So this is just a very, very small premium to pay. And you don't even pay for this if it does not hit your stop. All right. So that's a guaranteed stop there. If you want to find out more about this, right, you can just Google. So IG guaranteed stop Singapore, and then you can actually see the full explanation on this. So if this is your first time hearing about this, right, make sure that you actually consider this. If the market starts dislocating again, there's a very, very big risk that I'm actually looking at that can be potentially very scary. All right. One of the big risks is that if you look at how the central banks has been printing money time and again, right? What happened is that there is a lot of money that's flooding the markets, but there is also a lot of reports from a lot of different journalists and analysts that's saying that these monies are not reaching the man in the streets. All right. So you can also Google about things about stagflation and stuff like that. So you have a lot of printing of money. The prices of things are going up. All right. But this money that people are actually contributing or are printing is not reaching the man in the streets because they are filling the pockets of the richer guys. All right. This is happening in a lot of different countries here and there. And hence, you have this crazy scenario that people don't actually have got the money to sustain the economy. All right, but there's actually a lot of debt that is created. What happens then? Okay, so for those who want to actually read out a bit more on this, you can Google about the super cycle, the 100-year cycle, or even the cycle that's even bigger than that. All right, but I shall not go into that. So the main thing is that you need to protect your downside risk. All right, so guaranteed stop is actually one of those. Now, so when you're actually trading in the extreme volatility, right? So just now I actually talk about this. If you place your stop loss, the market can get through your stop loss. That's one of the problems. Then you were thinking, okay, so I can use guaranteed stops, right? But sometimes the guaranteed stops has got a minimum distance that's too far away. All right. So we had clients that had complained to us on that, because in order for us to insure against further losses, right, we need to have a minimum distance here between the guaranteed stop loss and the price that you're actually getting in. All right. So how do we actually provide a solution on that? We actually came up with this product, what we call knockouts, that is able to have 2 stop losses. All right. I mean, it sounds a bit crazy, like why are we so anal about having stop losses? The main thing is the knockout here is your guaranteed stop, okay? Because this thing has got a minimum distance there. All right. So this is where we can potentially guarantee your losses if you were to get downwards. But be above this, right, we are not able to guarantee anymore, but we can still allow you to have a stop. So in normal markets, this stop will take you out. But if the markets dislocate, then this stop will take you out. All right. So this is a double stop loss solutions. IG is the only brokers in the whole world that has got this. All right. But with this, right, there is actually another report which I forgot where I actually saw it from. IG has got the highest percentage of profitable traders. All right. Why is that so? It's because we are actually very, very focused on trying to make sure that we have the best conditions for clients to make money. Right. But that said, we still have about, I think the percentage is still hovering at around about 20+% to 30% ish. All right. So that means about close to 30% is making profits. The rest of the 70% is still making losses. All right. But this is actually still better than the industry standard, which is about 80% losses, 20% in profits. All right. So that's the world of trading. But the thing is that you need to increase your odds in at least making profits there. All right. So 2 things that I've already shared with you. One is manage your losses by having a lot of different stop losses here and there, and understand the various conditions that can result in losses. All right. So that's one. Second, have a trading plan. Right. Once you have this two, right, naturally, but I cannot guarantee this because you need to actually put in the hard work to make this happen. But you have a very good chance that you land in the small minority that is profitable in trading and investments. All right. So I want you guys to actually land there. And the sessions that you have attended yesterday and today is already helping you to achieve that. All right. Plus the technique of pyramiding in and out. Okay. So I've already shared with you 2 different main techniques there. Now, what is the last thing that I want to share with you? Okay, I'll just jump through these knockouts first. Okay, this is the double stop loss that I was talking about. The last thing that I want to share with you, right, is really the sizing of positions, all right, as a function of volatility itself. So the thing is, now, just now I've talked about pyramiding in like one quarter, but end of the day, right, what is your full position size? All right, what is the full position size that you want to get in? So naturally, when I ask a lot of my friends, right, they will just have a very rounded number. Like for example, oh, I want to buy stock X. I want to spend $2,000 to buy stock X. So they just come up with this arbitrary number, $2,000. All right, I will ask them, did you come up with this $2,000 mathematically? Most of them would actually say no. All right. So I want you guys to actually think of this sizing of positions. It's actually very important. So when you talk about sizing of position, right, how much do you want to risk in each trade that you key in? All right. You want to risk 10%. So the thing is that how do I actually come up with this 10%, right? I think Rainer Teo has also talked about this in his session there, but his is actually lower than 10. I think it's about 5% or 8%. All right. So if let's say if you come up with this number of 10%, right, for you, right? So it means this, if let's say if you have 100,000 that you want to invest, all right, and you want to buy stock X, and you want to put in 10% for stock X, then in that case, you are going to be using only 10% of 100,000, which is $10,000, right? $10,000 for stock X. That's the maximum, right? The rest of your other monies will be used for stock Y, stock Z, stock other things here and there. And if you use for some other asset classes, that's even better, like commodities or even Forex, all right? So spread your risk around. That's the diversification part. Now, in this 10% here, right, you can further cut it down into quarter pieces. So if 10% of 100,000 is 10,000, so you want to go 10,000 on stock X. Now cut this into 4 pieces. So 2005 first. When you see that your entry conditions are being met, right? 2005 in first, and then if it continues to go in your direction, the next 2005 in. And then if it still continues to go in your direction, next 2005 in, until you have your fourth 2005 in. All right. That's how you slowly pyramid in. All right. But the thing is, on the onset, you still need to calculate what is the size of your full positions for stock X. All right. So I'm just using 10% as an example. So this is assuming that you want to diversify across 10 different instruments, right? What if you want to actually diversify against 20 different instruments? Then you actually reduce this to 5%, which is even better, right? How about 2%? How about 0.8%? Now, why am I putting a 0.8% there is because if you ask a lot of the expert traders, right, they are effectively only risking 0.8% of their portfolio. That's how focused they are on managing the risk. I want you guys to actually pause and think about this. All right, that's how focused they are. And if you look at the amount of profits that they're actually making, right, on the whole portfolio, they are getting a typical rate of return of about 60 to 80%. All right, 60 to 80%, while risking 0.8% of their portfolio for each of the trades that they are putting in. All right. This is food for thought. The thing is, I don't expect you guys to actually reach that level of risk management on the very onset. I just want you guys to actually just think about, okay, so how much am I risking for each of the trades? Let me cut it down into 4 pieces, and then let me see whether I can actually tame this down. All right. So I want you guys to really be very, very focused on this. Now, I want to reiterate again. I'm actually hearing some voices in your head there that says, if I risk so little, then how do I make the upsize profits that I want to make? Right? Remember what Rainer Theo said? He actually said that you can actually reduce your risk and increase your profits. All right. If you still don't get that concept, go and go back to Rainer's recording and go through it again. All right. The thing is this, a lot of expert traders, they are doing the same thing. They're doing the same thing. Reduce your risk, increase your profits, and then as a whole, you actually be able to secure your losses. Keep it very low, very low. You're like just reaching it. And then your profits just naturally come in. So for those who are actually businessmen, right? If we have a businessman in this crowd here, this is the same concept of if you rein in your costs, if you control your costs, but not keeping it too low until to the point that your employees are unhappy. I mean, just keep it low enough, just be prudent while keeping the revenue running in, right? Then naturally your net profit is going to be increasing. Same concept, all right? So trading is like running a business. So I wanted to also refer you guys to another piece of thing that you can actually take a look at, which is the Turtle Traders. So the Turtle Traders actually use this average true range, which is also mentioned in Reno's recording. Okay, how do you actually find this? You can just go online, Google for the keywords Turtle Trading PDF. All right, I think if I'm not wrong, I think Reno's, you actually get Reno's hit as the first hit under Google there. All right, so Turtle Trading PDF. You will see this average true range coming out. So this is actually a measure of volatility. It shows the average range that the instruments can move over the past X candle. So I think Rainer used ATR 20. this is a pretty common number that people use. Now, you can actually use this and see how much the market has actually moved as an average over the past 20 candles, all right? So in this case, I'm using the daily candles here. So this is the past 20 days. On average, it moved about 300 points. Of course, this is just using this example here. So once you get the hang of this concept, right, you can actually extend this to the hourly charts if you are trading on a shorter time frame, or you can use this for any other time frame. It's up to you, all right? But I just want you guys to actually incorporate this average true range into your trading. How do you find this? If you're using the IG platform itself, is under the indicators, all right? So average true range. Once you get the hang of this, right, I get this question a lot, is that do you actually use the hourly, the 4 hourly, or the daily? All right. And do you actually put your initial stop loss at 1 times or 2 times? There's no hard and fast rule. All right. You can use 1 time, you can use 2 times, you can use 1.5 times. In my own strategies, right, I have an array of different multipliers of ATRs. How I actually did that is that because, okay, if you sign up as an IG client, right, you also got access on this advanced trading platforms called the Pro Real Time. Okay, that one, there's actually a separate fees on that. So $60 per month, but that's rebated back to you if you trade at least 4 times for each calendar month. So it's effectively free. So using that, you can actually key in the various different multipliers of the ATR, right? And you can do your own back tests, right? See which one is actually more effective for you. All right, so you can actually find the optimal value and then use that for your trading strategy. All right, so you can also try to see hourly, 4 hourly, or daily, which one is actually best for your own trading strategy. All right, so that's using the Pro Time. If you don't have that, or if you don't want to open an IG account just for whatever reasons, it's fine. You just need to go and find this and explore around the various different time frames there. Okay, so I just want to we're actually approaching the end of our sessions today. I just want to share with you this this promotion again. I think just now Jeremiah has actually spoke on this. So only for this event, right? If you actually open an account with us, okay, this is only open for new accounts. So if you already hold an IG account, this does not apply to you. We have other promotions time and again for you guys. So this is only for new accounts, and you must have a Singapore residence address. All right. So if you fulfill this, open the account, fund in at least 500 Sing, all right, and execute 1 trade within a month of today. All right. It's very easy. You can just go in there, just pick something, and just go and buy or sell. All right. If you just want to qualify for this, you can just do a buy sell that kind. All right. Of course, if you're just doing that, then take note that the commission that you are paying us, that is actually reducing your $100 there. So this $100, there's no other condition. There's no volume conditions. There's nothing. You can just withdraw this out if you want to in future. We just want to actually get you guys to try the IG platform out. We have guaranteed stops. We have knockouts. We have the Pro Time platform itself that you can actually use to back test. So what the different speakers here and there have taught you for these past 2 days, right? Why not put it over in the Pro Time platform itself and just use it to see whether you can actually get some backtest results. All right, so use this link, is bit.ly/IG-2021. Okay, I think this link should also be in the chat box there. All right, so use this link and open the account with us and get this qualified. Also because the first 10 new account opening, that qualifies the first trade. All right, so you have funded in 500, you made your first trade. You also get a free book from MarketWise. All right, so please go and do this right now, only for the first 10, and we'll really see by the timestamp itself. We count a timestamp of your first trade. All right, so take note of that. Okay, and we also have a lot of different educational stuff that is happening for this year, especially this year, just because that it's actually in a webinar format because of COVID, right? So this is the foundational series. All right, now we're having a 1 talk every week on a Thursday, and we are in the intermediate series right now already. You can actually go and find this out from the IG seminars. All right, so you go to IG.com, go and look under the seminars there. This is only on the Singapore website, all right, because I'm actually from Singapore. All right, so go and look under there. You can actually register. And specifically, if you are somewhat tech savvy, This doesn't need programming, but you need to understand how to use this, right? I've got this 2-hour session that I've recorded, backtest, validate, and discover new trading strategies using Pro Real Time. All right, so go in there, take a look at this. But in order to access this, you need to have, you need to be an IG client, right? So just get your account open, get the free $100, get the free book, and then access. Go and take a look at this 2 hours recorded webinar here. All right, it shows you how to backtest things. All right, I'll be holding these sessions almost every month. All right, so if you want, you can actually come back and then just have a revision on that. I'll see whether I can actually incorporate some of the things that I actually learn from this summit itself and try to create a new prototype sessions just for you guys. All right, so I will actually play around with that. And other than that, you can also find a lot of different sessions here. So there will be a total of 21 different webinars. All right, it's still on. It's still ongoing. We are now at about the halfway mark there. All right. So please open your account. Just click on this. And as a parting statement, right, I just want to share with you guys this. It's not whether you are wrong, you're right or wrong that is important, but how much money you make when you're right and how much money you lose when you're wrong. Time again, you hear a lot of other expert traders that has been telling you on this. Rainer also emphasized on this. All right, like for example, if you're right, you make how much? If you're wrong, you lose how much? If you keep focusing on reducing your losses, all right, if you reduce your losses, you keep your profits the same, naturally your per trade expectancy is going to increase, right, resulting in net profitability. All right, so you need to really focus on your losses. Focus on your losses, and your profits will naturally come your way. Mark my words there. Now, when that happens for you, right, I want you guys to also, okay, this is my personal appeal to you. Of the amount of profits that you make every year, right, at the end of the year in December, as you celebrate your Christmas, okay, I'm a free thinker, so this is actually not a religious message. So at the end of the year, donate 5% of your net profit to a charity of your own choice. All right, make this a habit. All right, so you tame your risk there, and then after that, then you actually do something good with your profits. You will be very motivated to do this again and again and again and again and again. All right, so I hope that you guys can actually do that. And this statement here is actually not by myself, it's by George Soros. He knows what he's talking about. All right, so with that, I just have got this very short 3-minute survey. So just help me to scan this QR code so that you can actually fill out this survey. While I take some questions, I can see a lot of questions that's coming in. So I'll just take a look at the questions right now.
Terence, I think I saw one question that I think is quite relevant. Okay, so Danny is asking, right, what about those who registered an account with IG previously but has not funded yet? So can they still take advantage of this offer?
Okay, usually by the terms is you will not qualify, but I will see whether I can make an exception on that. So for Dennis, could you help to drop me an email at this email here? All right, so no promise, but you drop me an email here. Let me see what I can do here. All right, so it's terence.tan@ig.com.
And I think there's another, question also is that, let's say, for example, I think IG has a time limit. So if inactive for about 2 years, right, they'll close your account, right? So if they close the account and reopen again, does that constitute a new account opening?
I'm not sure of the answer on that. So I'll still need to also find out for that also.
Yeah. So if this is your question, right, then just go ahead and just email Terence at terence.tan@ig.com.
Yeah.
All right.
Help me to type in that in the chat box.
Give me a moment. I need to type in first.
Okay. All right. Let me also just go back to that QR code there. Okay. So also just help me to scan this QR code and fill in a short 3-minute survey. Okay, let me just go through a few questions here. Okay. How easy is it to open an IG account? So if you actually use the link, right? Okay, let me just flash the link again. Okay, so if you actually use this link, you will naturally be brought over to the My Info. So the SingPass My Info, you can just type in everything in there. It will just be open within a day. All right. Of course, this is Sunday, so it should be done by tomorrow. All right, it's very simple. Just because I think SingPass makes it so easy. Okay, for those who are actually not in Singapore, okay, I just want to make it very clear that only those who are residing in Singapore qualifies for this. So if you're actually opening not from Singapore, then you do not qualify for this offer. But I'll still urge you to open just because of the various different advantages, right? Like for example, the guaranteed stops and the knockouts and stuff like that. Okay, so let me take a few technical questions. Are you able to place trailing stop and guaranteed stop at the same time? Answer is unfortunately a no, right? Because once you have placed in a guaranteed stop, then what happens is that there is actually various mechanisms that we have to do behind the scene to ensure us in case the markets really do dislocate. All right. So we had situations whereby when the markets dislocates, the client sidestepped a huge amount of loss, like 5 to 6 digits. And the client actually got worried and came and asked us, thanks for the guaranteed stops, but did you guys actually lose more than 100,000 there? So we told him, no, we did not. We did lose a little bit because of the some of the hedging mechanisms there, but we did not lose that huge amount there, not even close. All right. So we got worried. We went to ask our London office. So the answer is no, you will not get hit there. All right. So we have some very, very advanced techniques on that. But unfortunately, you have to choose trailing or guaranteed. All right. So if the market is going crazy, yeah, then you have to use a guaranteed stop. But guaranteed stops, you can still adjust it. So more trouble for you. You have to own self go and chill, so-called. All right. Every half a day, go and update it. Right. Does IG have options? Yes. Does IG have guaranteed stops with options? No. All right. So guaranteed stops is only for the usual CFDs. So our options is just the normal options. Just because options itself is very volatile. Options is even much more volatile than CFDs. So options is not turned on by default for everyone. If you really want options, then you have to call in and say that I want to have options turned on for my account. All right. So that's something that you need to turn on by yourself. Is your stop loss set based on each 25% of entry, or is it possible to set one stop loss to cover all entries? All right. Yes, you can. So when you actually open your positions, right, there is actually a setting that you can choose, which is called net off. So that means, what it means is that if let's say if you go long 10 lots, so you go long 10 lots, go long 10, go long 10, go long 10. So you plus 10 4 times. When you sell, right, you can actually have an order that says sell at a certain price. That's your stop loss for everything. Then you do a minus 40 there. All right. So hence that selling will actually net off with your first 4 positions. All right. So you can actually have one stop loss to cover all your entries. So you make that one stop loss as a separate order. All right. And make sure that all the orders and all the positions are using the net off function. All right. So net off is as opposed to force open. So we have both. All right. Force open, it means you want to keep your long and your shorts. All right. We recommend using net off. Okay. So for the 0.8% risk allocation, wouldn't the fund size has to be substantial? Kindly comment. Not exactly. Let's say, for example, if you are, because the thing is that now you're actually also trading on leverage, right? So if let's say if you're opening your account just with like $10,000, right? So $10,000, if you take 1% of that, that's 100. So 0.8 is 80, right? So you calculate, so 80 is your maximum loss. So based on the $80 maximum loss, you count what is your distance to your stop loss. All right. So based on that, what is the size of your positions going to be? All right. You will see that that position might be a bit small, but this is 1 quarter, right? And then you can actually just put in the next quarter and so on and so forth. So the thing is that if you see that it's too small, then you can actually upsize it a little bit. So end of the day, you're not really using like 0.8, but you're actually using 0.8 times 4. But if you want to use 0.8 as a total, that means 0.8 for each of the position is just 0.2. That's also possible. All right. The thing is, you will end up with a lot of different positions. All right. But the thing is, this is just only one opportunity, right? What if you have 20 opportunities, right? If you look at the Rena's presentation, he's actually looking at the top 20 there, right? So you have 20 opportunities, 20 times 0.8, you're actually risking about 16%. All right. So think in terms of this manner. You're looking at it as a portfolio itself. All right. And are you really risking 16%? Actually, not really, because the risk will actually cover each other a little bit here and there. All right. So, okay, are we owning CFDs? Yes. So we don't have the actual stocks itself. So ours is CFDs on everything. For those who are actually new to CFDs, it's contract for difference. All right. That means if you actually buy, let's say like an Apple stock CFD, you're not actually really owning the Apple stocks, but you're actually owning just the CFD. That means you're trading with us, but we don't take your other side of the risk there. We will just throw the risk out into the open market itself. But it also means that you cannot participate in the annual general meetings voting for the companies that you are actually buying with IG. All right, so just be clear on that. All right, so commission per trade, is there any commissions that IG is charging, especially for the US stocks? Yes, we are charging commissions for the US stocks. Now, take note, if you're using any of the brokers that is not charging you any commissions for buying US stocks, right? It means that they're still running a business. But if you're not paying them, that means you are no longer the customer. You became the product, right? Time and again, I think people are not aware of this concept that so if you are just getting something for free, right? Nothing is for free, so they're actually monetizing you via other means, right? So that's what we call the payment for order flow, right? So you can actually Google about that. You can also read about this book. It's a black book. I think it's called the Flash Boys or something like that. It actually explained that in a more dramatic manner, right? But take a look. There's actually a lot of weird things that's happening in the markets there. Okay, maybe I'll just take a few more questions. Okay, is this offer only for Singapore residents or those with an address in Singapore? Okay, technically, those with an address in Singapore. All right, so this address must be a residence address. You must need to prove it. All right, that means you must have a utilities bill or something similar that is built to the Singapore address, right? If you're currently staying in Germany and you have residential address in both countries, as long as you also have one in Singapore, then you also qualify. All right, so just be clear on that.
All right, Terence, one last question. We are running out of time already. All right.
All right. Okay, let me pick one last interesting question. Okay, I think this is a very good question by Wayne. By placing our risk at a small percentage, let's say less than 5%, will that cause our trades to be easily hit because the stop loss is now nearer? No. Okay, let me just explain what it means there. So if let's say if you risk just 3% of your capital, now the 3%, right, is actually the amount of money that you can lose. Let's say, for example, this is $300, right? So absolute amount is $300. Your stop loss distance, right, is still based on how you analyze the charts itself. So if let's say your stop loss distance is 80 pips away, for example, just as an example. So 80 pips is still going to be the stop loss. It does not reduce. You now take 300, divide by your stop loss distance, you'll get the results as the size of your position, right? So it just means that the size of your positions now gets smaller, all right? And you mitigate that smaller positions by having more different positions in different asset classes and instruments, right? So net wise, you're actually still getting a good rate of return, but your risk is now reduced. All right, back to you, Alex.
All right, thank you, Terence, for your wonderful sharing. So I think quite a number of commented that this is a insightful session from you. Okay, so before I end the session, all right, just want to share one more time the IG offer over here. All right, so let me just post the link once again in the comments in the chat box. All right, so the next session will be at 1 p.m. All right, so I will post the link over here at the let me see okay, the Alien Watch Strategy to Stop Your Trading Frustration by Beanie. All right, it is at 1 p.m. All right, are you guys able to see the link? Okay, so yeah, thank you, Terence, once again. So we have a few more minutes right before we head to the next room. So just go ahead to the next room. And if you are registered for the event, you should be able to see the link in your emails or in the Telegram channel or on the Facebook page. All right. So thank you, Terence, once again. We will see you again soon. All right. Bye-bye. See you guys in 10 minutes time. Bye-bye.